Alright, both of you, please tell me what should an investor do during wars, geopolitical tensions, economic crisis?
Step by step, stay glued to the news. Track markets minute by minute. And if things get worse, exit everything. Just sell it all immediately.
Absolutely not. Staying glued to the news or what's happening around you will only increase your anxiety and result in panic selling. Whereas, if you realize, panic also creates opportunities for long-term investors. Staying invested for the long term is the key.
Okay, but as an investor, in how much time should I expect the market to perform? Weekly, monthly, or yearly?
Of course, weekly, madam. At least 1% movement every single week. If it's not moving, what's the point?
Again, misleading. Markets reward patience. Tracking your portfolio daily or weekly does not help at all. You should definitely track your performance, but monthly, quarterly, and then yearly. That's the way to go.
Interesting. And what kind of returns should an investor realistically expect?
Minimum 30% a year or around 20% in the next 6 months. Some stocks even double in a year. And I always invest as per this.
That's not how market behaves. Even a 15 to 18% CAGR compounded over 4 years has the power to double your money. Compounding happens in long term. Always remember that.
Okay, let's say I don't have enough funds to invest yet. So, should an investor use borrowed money or some leverage to invest?
Of course, you should borrow and invest. Bigger capital equals bigger profits.
This is absolutely wrong. Deploying borrowed capital is signing up for suicide in the future. When you borrow money and deploy in short-term volatile markets, because the market is uncertain, there is an extremely high risk of your wealth erosion. Forget creation. Ensure that it's your own money deployed scientifically with the help of an advisor.
Fair. And what about portfolio tracking? Should it be stock-wise or portfolio-wise?
Definitely it should be stock wise, because if a stock falls for 1 or 2 months, I always ask to sell it immediately and move money quickly.
That's how typically short-term people react. When I say people, they're not investors. These are just tactical moves. Stocks individually do not represent the movement of the market. It's the overall portfolio. Ensure that you have a segregated portfolio. Ensure that you engage with an advisor who can guide you over the percentage allocation and the deployment of your funds more scientifically. If you also want to start your investment journey, always ensure that you have an advisor with you, because in uncertainty and in volatile markets, it's always good to have someone by your side, क्योंकि advisor जरूरी है.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.